I want to welcome everyone to the Crypto Kingdom. This is London. Guys, go ahead and pay attention to this real quickly. 5,500 in USD test. Guys, sign up on Gate. The link is going to be in the description. Let's go into Bitcoin. Let's have a good time tonight, guys. It's going to be a short stream. We're going to go over proper allocation, guys. Proper allocation, not financial advice, but proper allocation of your funds. Okay, we're going to talk about that in terms of a strategy that I hear the VIP doing quite frequently. It is very productive for them. So let's go over it today. And as you guys come in the room, if you are listening to this the next day, we want to just thank you guys for being here. I'm going to put in the comment section there, guys, for you in the chat room. Go ahead and use that link. We appreciate you being here. We're going to go over one of the most important things that we cover here at the station. And guys, we've covered this for a long time, and people have had phenomenal success with it. So let's just pay attention to if you want to call it, the proper allocation of capital, guys, that I see people doing very well with in terms of their strategy to not be overexposed. As you guys know, the recent move to of Bitcoin from under 30,000, guys, up to what was the high? Just under 43,000, but over 45% within like 10, 11 days was a nice move. We're amidst. I'm going to go ahead and call this a retracement now. Last night I did not want to call it a retracement because we weren't hitting any of the Fibonacci's, but I think we're well enough into it. And guys, we just have continued to frustrate. I know what's going on in this zone. If you guys are wondering what is going on, there's just not a whole lot of buying or selling pressure. It's very tight in here. I just completed a trade earlier on today, and it's just, earlier on today, many of them, but just now before I got on the stream, I wanted to complete one more, but it is just so tight in here. It's just, there's not a lot of room to move. So in terms of like big buying pressure, it's just not going on. So I think we can go ahead and say that this is in a retracement. And I'll particularly state that because it also looks like we are coming up on a Fibonacci level. Now, in terms of the allocation strategy, I just want to cover what we have covered on this channel for a long time, and it has served people extremely well. First of all, I have this green line up along the top. You guys will see that green line. That green line is going to be an indicator where an additional funds, if you guys can see the stars, additional funds would be essentially, guys, indicated once that line is beat. Okay, that's the trend line from the top, the 64.86310 going down. That's the major remaining trend line that we're looking at in terms of beating. So once that's conquered, guys, once we can get through that, and this box may move, guys, it may move down depending upon when that trend line is broken. But essentially, we would be in the clear. We'd probably have some EMAs to conquer. We'd have some additional barriers up there. But as we're looking at kind of a containment within this zone, and guys, we are within a wedge here. This is a falling wedge. As we're in a containment and looking like we're dead, we're almost on, guys. This next level of the Fibonacci. I just want to let you guys know exactly how the overall, capital allocation strategy works that I've seen work phenomenally well for the VIPs. Now, in terms of the different levels of the Fibonacci's as we go down, guys, they're just pricing targets. This is a pricing target tool. When you get out the Fibonacci, you guys know that it's under the pitchfork. You grab it, you go to the low, you go to the high, and bam, it immediately calculates all of your entries. Guys, it's very, very easy. Everyone, guys, most people in the market, you guys understand, you use them. They're just they're the standard of the industry. Excuse me, I would say. So in terms of the actual allocation of capital, I want to cover that because the VIPs are very matter of fact, and just the traders that I know, guys, in terms of never being overexposed at a higher price. Okay, now that's going to require a limit in terms of how exposed you are at the upper levels. So at the upper levels, the people that I see doing very well, and this is the way that I practice, at the upper levels, people will typically kind of pepper in, okay? They'll probably, that's the strategy, is just kind of lightly be involved in and around this upper level. As they drop down, to the, let's say to the 36, let's expand this a little bit so you guys can actually see these levels. I want you to be able to see these. Let me clear this up so you can see all of the levels. Let me lift this up. Yeah, as we go down, let's say, and you guys, in terms of the levels, you don't have to remember them, but if you're looking at the 23.6, the 38.2, the 50%, or the 61%, guys. Below this 61% is the golden pocket. 78.6 or the 86% is kind of a surprise level. A lot of people don't know about the 86%. Please pay attention to that level. It hits quite frequently. We trade that level all the time throughout the day as we're trading, and a lot of people book trades today, guys. A lot of people. Shout out to Ryan. I know he booked a trade. I was excited about that on Bitcoin. Very nice to hear about you. And he's busy with a full-time job, guys, or a very busy job. So it was nice to hear that he's booking trades. So as we look at this, the notion is, if we do have an exposure, let's say a level of exposure at this top level, let's say that's indicated by this star here, okay? We would take this star at the top level. At the next level down, we might, we don't want to multiply those. I'll explain those smaller fib levels. I will explain that here in a minute, and it actually might make sense right now. Let's go through that as we talk about doubling or tripling down at the lower levels. And it wouldn't just be one star, guys. It would be, essentially we'd be looking at, a multiple thereof at the lower levels. So we would, each lower level would have, and not just, let's say, if these each represent capital. I think this will be kind of a good instructional that we can refer back to. But at these lower levels, we're going to be looking at increased amounts of capital that are going to be exposed. Guys, it's the only real way, other than a quick stop loss. And I'll just tell you, a quick stop loss can wind up causing you additional losses, on greater amounts of money, guys. If you're playing heavily and you wind up getting stopped out, and the market makers, guys, they just love taking out your stop losses. You guys know that. So as we look at the kind of the compounding effect here of capital along the way down, it just makes sense to heavily stack your capital towards the downside. I'll just go ahead and say that, and we'll just kind of stop there for purposes of, I'd say, illustration. So a lighter level of capital in around the top with some reserves. That is what I hear people, doing really well with, and that's just a solid approach in terms of not making, the worst thing in the world is when someone contacts me and they're like, London, I don't know what happened. I got into such and such, maybe to Bitcoin. I meet some very high line professionals that bought Bitcoin too high. So if you bought a coin too high, you guys are in very good company in terms of like some of the top people that I know bought high, not just on Bitcoin, on a lot of coins. So this capital preservation strategy is really important. As we look at a contained range, I feel really comfortable using this strategy because we do have a solid line of support. So the notion, I'd say the probability that we would just completely dive through the entirety of this expressed pattern formation is really, I'd say it's on the, it would be highly improbable in terms of completely going through, and just delving down beyond, where we're at right now. We've had a huge move to the upside. I also want to cover something that's really, really on my mind, guys. I want to talk about this spike we recently had, and I really feel, I just have to say this, and I know we accomplished the entire amplitude in terms of this pattern formation, which is important. We did fulfill that pattern, and the pattern that we fulfilled is a wedge. You guys know that. But what's important and what I want to mention, it's been gnawing at me, guys. Very rarely, as we look at trading, guys, very rarely is a move like this to the upside, is it just wasted, okay? And when I say wasted, what I mean is just typically this is a move that would want to repeat at some level, okay? As we would study, you guys know about a bull pennant, a bull flag, etc. This is such a clean move to the upside, guys. Such a clean move. It's cleaner than anything we saw in the beginning of the year. You guys know that as we really assess this and look at these, and this was a bull flag which formed. And notice how volatile things became before it decided to go up and over, guys, again, and complete that kind of that old rule that flags fly at half mast, just a repeat of the run up. The definition of a bull flag, you're going to need a nice run up, right? That's essentially the qualification number one. You'll need this run up. Now, unless it's just viewed as, well, that was done so that we could complete this pattern formation, and I'll say that, that could be, that'd be almost a theoretical issue as to why that was done, why this move went off the way it did. I just say rarely do I see a move like this and when I say wasted, guys, or almost, you could say almost maybe forgotten or just not put to use, It's just expressed so much bullish activity here. I would be surprised if it doesn't try to repeat. I have to say that, guys. I'll be surprised if it doesn't try to repeat in some form or fashion. It's just too strong of a move. It's just, and again, the only fallback, we could look back and say, well, I guess it just wanted to complete this formation, because it did bring you right back up into, if you guys will follow this trend line from the top, you see here from the top, yeah, it did bring us back into perfect conformance, I'm going to say, with that trend line on the way down. So unless we were just to kind of theoretically say, well, I guess it just wanted, what did buyers, potentially, maybe buyers wanted to just step in and complete a pattern. It doesn't sound right, guys. I have to say, it just doesn't, it doesn't make a lot of sense to me that this would just go to waste. So I would look for, I would be prepared, and while I'm talking about a capital allocation strategy, it's one thing to have kind of a balanced portfolio, guys. It's if you want to play aggressive, I'm not going to tell you not to. Let me say that as well. I just don't want people in the long run ever, talking to me about the fact, well, no one talks to me about, well, we lost money because this or that. No, I follow a reasonable capital allocation strategy. So in terms of the strategy and the heavier cash towards the downside, you're never going to get poured out on, guys. You're never going to get completely drained out at a level where, well, I had all of my money up at the, let's say, the 38.2, okay, at the 37.841 and around there. Now we are currently, at that 38.2. We're just right at it, guys. So it's an exciting time to really analyze this and look at it. We can go over the price action from today. I think it's important because we had last night we dealt with the wedge, okay? We dealt with the wedge. I didn't want to push things, in terms of, forming a different pattern. Because of where we had started with that wedge, and we did get into the wedge last night. But guys, this is the story in terms of how things have continued to develop. It's just, it has, it's pushed to the downside, it's pushed to the upside. At some point today, we just called it and said, we have to call this a channel. We just have to, in terms of the breakdown that it received, and then it started to break up. It broke up when it broke up and out, when it decided to try and, I'd say form an inverse head and shoulders with what we were looking at. So in line with that, it did break out, and I brought it to the attention in the back of the VIP, and I let them know, I gave them a specific video and said, this has broken out, gave them the page number and source, etc., letting them know. I think at that time you guys can clearly see it was an inverse head and shoulders, and you can see the price up in this area. And I was like, at the bottom it says the importance of volume, and I reminded the VIP, while we're looking at an inverse head and shoulders, the importance of volume, and I just wanted to bring that to their attention. And I enjoy being able to do things like that, because I think it's just it's an essential part of learning how to trade, is looking at the materials. Looks like we have Angel in the house. What's up, Angel? Nice to see you. Joe Larry, good evening. And Crypto Cross, nice. Hoping we hold here. Absolutely, we're hoping we hold here. We're hoping that we formulate some sort of significant contact with the we've already passed the 23.6. That 23.6 was, as we look at that contact, let's just review that real quickly, because guys, that was a pretty minuscule move in terms of that 23.6, the top level fib. That was about a 2% move. It just seemed it just wasn't much, guys. It moved from about 39,500 up to about 40,000. Okay, so you put maybe $500 on Bitcoin at that top level. We'd like to see something more significant. When I talk about not really, quote unquote, I don't want to say wasting the amplitude here, wasting this spike here. It was just so nice as we look at some of the other zones here. This zone here, it repeated a move up. It was nice. We experienced, it caught a lot of people's attention. So in terms of the other moves up, I just want to talk about the fact that these expressions, these positive expressions of price, that they did repeat. Now, first of all, they went through a pretty hefty retracement. Let's go ahead and measure this just so we can kind of understand the feeling, if you guys remember. And these were important moves. If you understand, in the beginning of the year, these were moves from 17.4, okay, from 17.4 up to 41. So guys, that was over 2 times your money in 30 days. So people who were involved in Bitcoin and getting involved in Bitcoin understand the dynamic that went on there. That was 139%. That was $17,000, okay, in December to in January. You guys remember it hit 41. So Bitcoin has the potential to move. It has the potential to surprise people and just knock their socks off once it's kind of in the clear and it gets the right kind of attention. So that was a move up, but look at this volatility afterwards, guys. After it gave all that to people, it dropped a good 25%. It dropped a good, 29%. So it went down 30% after delivering all those gains. It went down from, and that was quite a ride for people who had gotten involved at 41,000 and, were literally sitting there looking at, well, it's at 30,000. So it's gotten people to that point of capitulation, frequently. That's been just kind of an characteristic of the market, of Bitcoin. It's like, it likes to push people. The people who do well are the people with backup reserve capital. I want to let you guys know. The people with the ability to double and triple down. I've kind of lined these stars out, and it's not real cleanly lined out here. But in terms of if this is capital, I just want to say, if this is someone's kind of capital exposure here, were this to go down into these levels, looks like kind of a cascade, starfall, etc. No, I'm sorry about that. I just put these on here. It was a small image. But the people who are doing well are the people who are structuring their trades to where they can increase their exposure. Like if this is, representative of money, they can increase their exposure as this goes down. And they're ready to, I'd say, to deploy heavier into something if indeed it looks like a breakout is occurring. That active attention to the market is irreplaceable, guys. It is synonymous with profit. I'm just going to tell you from the experience that I have personally, you guys, I think you'll agree with that active attention on the market, definitely taking advantage of your technology, definitely, looking to see how things can be made easier, how your alerts can be set. Those are the types of dynamics that are going to dictate your profit. So we're constantly, with the group, with you VIP, etc. In the back rooms, I'm constantly trying to update you guys throughout the day in terms of what is going on, providing you some alternative kind of, diagrams here on the smaller time frames, but looking at the different possibilities here. So when things broke out of the channel earlier on, you can see by this nature, the VIP were well prepared for not overreacting when it did break out. So that's a big VIP perk that I try and provide, all the time. That's what I love doing, guys. I used to teach people trading. That's what I used to do. Just market theory. I'll say market theory, not financial advice, but trading. And so that is what I'm geared towards. I really enjoy people grabbing a hold of the market like that. So the channel here that we have broken out of looks like we are, essentially. I mean, this is just how frustrating, how tight things are right now. It's just I guess the good news was that getting the information to the group, letting them know this move would require, and you guys saw that in the video, it would require, and that was an exclusive video to the VIP. And the price was doing this. You guys know that. And before people jumped on board with cash, I let them know it would require, we had the breakout. We had this small, kind of price line confirmation here, just in terms of the previous resistance becoming a support. And I just let people know it's going to require momentum. Right? So we did not get that momentum, and I sent along that screenshot essentially of the book letting people know the momentum is going to come in the form of volume, right? We didn't get the pickup on the volume. You guys can clearly see that. It's just we did not get the pickup on the volume. So that's that's okay. That's nothing to say that it must be on volume all the time, but that's typically the primary indicator that we're going to see, along with some other issues in terms of definitely we're always going to check all of our indicators. Confirmation doesn't just include a check with the volume and a check with the a quick check. And Angel, rocking it through. Nice to see you, Angel. I'm glad that you hopefully you were able to view that video earlier on when I sent that. That was part of my thinking was, how are you engaged? How are people in VIP, et cetera, engaged right now in terms of their positioning? Not to jump in too early with too much cash into a position and definitely to harness in the tools that we have in terms of the educational materials and the market. I just say we can say market materials and the group as a whole. Angela, it was so nice to see you today in the back room. He was absolutely rocking it out, very involved, attention to the market 100%. I know for a fact that Angel today did extraordinarily well in the market, extraordinarily well. And Angel, isn't it interesting that the people who tune in and focus on the market and tune in and focus on each other are the guys who are killing it. And it is not it's not complicated at all. It's just, it requires focus. It requires, it requires just the constant attention, that mindset in terms of using your instincts, definitely, but just using the camaraderie and using a teamwork attitude. It's just, if you have that and you're plugged in, you're doing well. That's all I can say about what I see. If you have that and you're plugged in, you're doing well. The people who aren't plugged in and don't have that, they're not doing well. And that's it's just I want people to do well. And it's like, at the same time, I understand people are also busy. We have to understand people are busy. People, the market requires, it takes it doesn't take it out of me or out of you. I'll say that anyone listening, but it's and definitely not Angel. But it's just, it is a difficult challenge to get involved with the market. And to conquer it. It requires you to take advantage of your facilities, both in terms of your physical, your habits, your application of your skills, your studies. Some people will want to rush in and trade, enter into a position. If they were to use more of their time, I'd say their time and their energy towards a studying or towards some sort of advancement, rather than someone else's opinion or what they can understand of someone else's opinion. If they would spend more time getting involved in their own development and say, and instead of rushing into and trying to be a part of getting the right answer or something like that from someone else, they may spend, 4 or 5 hours a day trying to, when they have time, or even when they're busy with something else, trying to find that right opinion that's going to make them money. Whereas they could spend that time themselves developing to where they can formulate the right answer and be able to defend their answer technically and rationally in the market. And they would be able to decipher amongst the other opinions, and they would be able to distinguish, whether or not it's even a solid opinion. And that's what we focus on here. We really do. We focus on the ability on kind of, I'm really dedicated to that in terms of ensuring that people, even when I say something, is it, are people able to recognize and distinguish for themselves exactly, exactly I'd say the process I went through, exactly, for themselves to determine whether or not it's a rational, kind of feasible approach. Is it something that they would agree with, or that they can feel comfortable that it's not just another opinion. It's what they think too. And there's a process that they go through where there's a kind of a dovetailing of the logic required for that. And it's just it takes some hard work to get there. It's not overnight. You guys know that it's just not overnight. So I'm impressed that you guys are able to continually do that. Let me say that, and I know that you guys are developing in that direction. I just want to inspire you that through the process of engaging in the market, it's going to test you. You guys know that without a doubt. You may not have a whole lot of time. That may be you'll have some challenging factors. I don't just talk about the next hype opinion and this is the next target and this is where we're going and everyone buy, sell. I don't do that. I spend time with people. I spend time with people, and I've been doing this for a while, guys, in terms of developing individuals who become great traders. That's just it. So people who want the flash, the flash, kind of hype deal, there's plenty of places they can go, and there's plenty of times they can go get the wrong answer. I believe in developing individuals to the point where they can develop the right answer, and then I can discuss the right answers with them. That's how they become more profitable. That's how I essentially can become more profitable. That's how the whole group dynamic to me just makes a lot more sense that way. I don't, it's like I just don't see everybody's looking for the golden goose, right? That's the whole deal. Everyone wants to find the golden goose, right, online with all the other stations, with everything that's going on. And I tell you, the golden goose is in the books. The golden goose is in studying and being connected and just mentally having the level of I'd say, diligence to be able to rationally discern, that there is not a golden goose, right? There is not, the channel or the hype or this guy's always opinion or this or that, or I just want to feel comfortable online. That's just not it, guys. The market's not always easy. It requires discipline. It requires a capital allocation strategy, period. I'm going to tell you, period. For people who haven't done well and don't like to hear that and just want to rush in and spend all their money, they're going to run out of money in 6 months or a year. Even if they get this play or the next play right, they're not going to get what they want, and what they want is to make money yesterday. That's not how the market works. So we have that level of discipline. We pride ourselves on that. That's really, I think, to all of your credit, and I really appreciate y'all's level in the back. Like Angel, I appreciate you today interacting with charts. I appreciate you paying attention to the market. Watch it pay off dividends. I mean, personally, in the market, et cetera, that's the most exciting thing that I see of our VIP. Like Ryan today. Ryan booked a trade on Bitcoin today. I was like, yes. And he's like, normally he trades Doge. And he got into the price action on Bitcoin. That's one of the most exciting things I can see, Angel, when the book is on your desk. It's phenomenal. When Ryan books a trade and he tells me I didn't have much time, it was before I went to work. Guy's working a full-time job. He's a professional. He's VIP. He booked a positive trade. Then he went to work. And I'm like, that is awesome. And I just know he's going to do well. And in terms of the group dynamics, I really look forward to it, guys. I can see where this thing goes, and it goes in a great direction because, it's clearly we have the right group. And that's exciting. So thank you all for continuing to work hard, for continuing to develop your own skills, because they're appreciated by everybody else in the group, and that's what makes our group so great. So as we look at this, let's get out the razor's edge real quickly. Let's get into. I think this was the razor's edge here. Let's talk about this. This was the problem here, and now I keeps wanting to push. I don't want to push it here when I'm essentially diagnosing this. I'm talking about kind of talking about the level of proficiency you'll develop. It takes a while sometimes. I don't like to be sloppy with my lines at all, particularly if we're discussing something that's this important. I'm going to tell you there's one quick way to do this. Let me show you the trick again in terms of this, because lining up these lines is not easy. We want to draw the trend line from the top down, okay? I'm going to select the trend line. That's real easy. Hit the magnet, okay? Hit that magnet, and we're going to want to zoom in for this, guys. You want to zoom in. It makes a difference. I'm going to repeat this because this lesson is not one that's taught, guys, by anybody. You need to zoom in. I'm going to show you this example one more time to show you how people's lines are off on almost every other channel that you deal with. Every channel you watch, their lines are off. I'm about to show you how, okay? Now, I can take this like this. I can even snap it to grid. If I snap it to grid and I sit here like this zoomed out, I can sit here like this. I can hit this. Let's go ahead and draw a trend line. You guys try this at home, okay? Try this at home and draw a trend line, and I'll snap this down to grid, etc. Okay, great. All right, we did that. Now, if this works, I'll be surprised because I want you guys to try it. I'll tell you probably 3 out of 4 times, you'll have to go back. And let's draw this up to the top, but you'll have to go back and zoom in and then snap it to grid. Now, it may depend upon how zoomed in we already are, but if you are not literally zoomed into the hilt on these, and especially if your trend line is important, make sure you get all the way into it and snap it down. Literally snap it down. And that's on important trend line, guys, where you're making some key decisions in terms of your holdings, etc. And I normally will do that on the top, on the key 2 focal areas, and then I will watch it. See, look at that. That's a much different trend line than if we just eyeballed it. Do you see that? See, that's snap to grid, believe it or not, like you wouldn't believe. You saw how much I just zoomed in. So this is how people's trend lines get off. People who don't trade, I'm going to tell you, other people who don't trade, that we like their opinion, we like their channel, we want to listen to them, they're not even operating on the proper trend lines. Do you guys see that thing cut through? You guys saw how much I zoomed in? Literally, that's on the hourly on Bitcoin. Do you see that? Okay, that's the, and we can relax it, but as I'm zooming in, I'm really getting, we're talking about technical proficiency. One thing, I am never afraid to redo my lines. You guys know me. If it's implicated for a generalized purpose and I don't want to complicate things, I may just kind of stick with a, kind of an ordinary, kind of generalized line that I'll, just kind of let, kiss along the top or this, that, there we go. Just kind of show the generalized structure. That's okay. But right now, when we've already pushed 1, 2, 3 times, I am going to get in literally as close as, as technologically possible right there. And I'm going to show you guys exactly where this trend line is. Nice to see you, Bullish. Nice to see you, XRP. Tommy, what's up? Welcome. We got a great day trading group here, and we trade Bitcoin, and a lot of people have been around for a while in Bitcoin market, etc. So, yeah, we focus on TA, heavy TA. We use the materials that we got. JP Morgan, we got BlackRock, we got some great guys that are in and around, and it's blue collar to white collar, a bunch of guys that want to beat the market, and we do that every day. We book positive trades. We're going over tonight capital allocation strategy, what we're focusing on, and we'd love you to join our group if you want to beat the market, and if you think you can, and if you know you can, we definitely want you to join. So in terms of capital allocation strategy, this is our capital allocation strategy. We want more dollars down in the lower levels. Being able to deploy them, at those lower levels and have those levels that haven't been compromised all by stop losses, etc. It's just, we don't give hands for diamond, we don't give awards, for diamond hands. So in terms of what we should give awards for are, this type of a move here in terms of drawing this trend line. We just zoomed in because I don't think anyone else has this line anywhere. Okay, and I just got down to the focal, and I mean, as much as this program will let me access these 2 points, I'm going to snap these on. This is a trend line. Very easy, guys, but it's just, you understand the purpose here. I want the exact line. I don't want an estimate. I want to know exactly where this line cuts down through. I want to know exactly where it was breached. I don't care, how awful it looks right now or what other lines we've drawn. Even if TradingView for some reason has a different chart, or if I'm on a different, let's say, the Binance versus the Coinbase versus you guys understand, versus the Bybit, whatever it is, if this chart is different, we're talking about this chart, I'm going to go ahead and snap this on. I want to see, okay, we've rattled along it, this line here. At first it just looks like, well, it looks completely wrong, right? Well, then we start looking into it. It's like, well, look at this action right along. And now look at this, guys. Look at this point right here. Let me do this. Let me take away this extension right there. Look at this point right there. Look at the point right there. I'm going to zoom in on this. Do you see that angulation right there along the line? Do you see that? That indicates to me that, yeah, this is on the hourly. Yeah, and look at this right here. Do you see this angulation right here? Do you see this this kind of, it's called a hitch right here? Yeah, you see that? That's telling me that we're probably on the right line. Oddly enough, okay, so all of this other kind of frustrated price action is indicative of the fact that it's just been, guys, it's been really, really tight. Okay, so those are, these are departures from the overall line. I know we've been day trading the heck out of Bitcoin, guys. We've been having a blast doing it. But as we try and formulate something that could be powerful right now, and we did take a departure from this primary line, we went to a different line last night that was more expressive after the breach from the channel. That was when we were trading. And guys, we've been trading. I hope it's not just all of us that are literally chewing into the price action. I'll say that Bitcoin has a good habit of doing this. We would want to look at, I'll just tell you, because we're trading the heck out of this thing. So it's not abnormal, though, as we look at the preceding levels here. It's done this before. Maybe not quite like this, and I know we are trading the heck out of it. Maybe not quite like the way it has now. Like, I don't think it's our fault. I do know that, we booked like 70 trades yesterday. I'm not sure how many were on Bitcoin, et cetera. I won't get into that, but, the group was hammering into it. So, this is just indicative of people trading, guys. And it's also, we just don't have much volume to work with. So, in terms of the overall market, we're not getting, there are no heavy buy-ins right here. It's not like, JP Morgan said, we're going to go ahead and offer it to our wealth management division. Really? I just have to say for them, because I've given them a little bit of props, and I've got friends, JP Morgan, et cetera. But really, because and the problem is they're probably not trying to buy at a better price. I'll just tell you that they're probably a generalized discussion. Well, we think it'll be good for the long term. I don't know, but I'll tell you, they're not trying to buy it at better prices here, because if they were, they'd be hitting these levels after this huge spike. Now, maybe they just did a real strong-handed just push. This was that preceded this big move up, and some people will probably laugh. We have J.P. Morgan and BlackRock, ex guys in our group. So hey, no, you guys know I'm a big fan, and but it's just funny because they'd be hitting their, if they knew about Fibonacci's. I guess they, not, a lot of them may not know how to trade Fibonacci's. You guys have a leg up, and I know you guys know this, on a lot of brokers, on a lot of people in the street, even, especially guys at Wall Street. Not all of them are using Fibonacci's. This is a very, I'd say, an advanced technique, and it's just one that works phenomenally well. We've seen it produce phenomenal results. Let's just take a look at some of the previous action here. This was during the consolidation phase. Let's just look at what this did here. Let's draw up a Fibonacci to here. Let me take off the magnet. The magnet will mess with you on the Fibonacci. So as we look at this, let me go to a different template. Let's see. Let me go to, what about the 8.6? I think that'll be fine. Yeah, and I want to make sure we can see this. So we don't need, I guess it'll be okay like that. But as we look at that, let's just see, did this operate within, kind of the paradigm here of the Fibonacci? Sure enough, absolutely perfectly. Like, how would you know this was going to go up, right? This preceding event and around June, right? June 21st. How would you know this would go up? Well, you slammed right into your 50% retracement. Just bam. And then, you had a good trade. So an accumulation strategy after the move up, with capital placed below at increasing levels as you go down, to allow for the possibility that you would completely retrace or even go to the, let's say, I don't want to talk about going below right now. We'll talk about backup reserve capital in a bit. But let's say completely retrace to the 78.6 or to the 86 or to the entirety of the move, that complete retracement. Now, being prepared at all these levels for the possibility of going lower, guys, that's just being prepared for being in the market. You have to strategize enough to where you understand that component. The guys that get burned in the market are the guys that go in too heavy, and they think they're gonna knock it out of the park every single time. Even the best home run hitters don't do that, guys. Some days they'll hit back to back, 2 or 3 in a row, right? And they also can strike out, right? You know that they'll swing the bat heavy, and that's okay. It's just the type of player. Some people are geared towards that. And that's okay. I just don't like seeing people lose money. I had some buddies of mine. You guys probably did too with AMC, et cetera. They made maybe 50, 60, 80 grand, 100 grand, 20, 200, however much it was, anywhere from 20 to 200. The people that I knew. Some people in the group made, some people here made, $70,000, $80,000 in a day. But then that next week they just gave it all back. And I'm like, oh my, guys, like, come on. It's like, I wanted to go like, work out, hit a punching bag. I'm like, I just don't like seeing people throw that hard every which direction, and they lose it as quickly as they made it. And that to me is, I say that with purpose because the whole idea of tonight is a capital allocation strategy, peppering in at the top, right, doubling and tripling down at every level. Now that is the guys, that is the strategy of the guys here in the group. It's also the strategy of some of the top traders, the institutional framework traders, guys, in the nation, guys, in the world, really. As you look at kind of the strategy of the big guys, the big bosses, what are they doing? Well, they'll tell you we're prepared to double down at lower levels. Okay, so verbatim, they will tell you that. And I'm talking about the biggest, largest institutional heavyweights in the market, in the crypto market. Okay, and not talking about a SpaceX or no, guys, heavyweight. Okay, SpaceX is heavyweight. I'm gonna say that, but I'm talking about the companies that own, a portion of, of 500 companies that fall into the kind of the revenue category of SpaceX, right? So yeah, so the big heavyweight guys tell you they are ready to double down at lower levels. So that's it's not something we've made up. It's not something it's not an invented maxim or norm. It is kind of the approach for the guys who are investing at the top of their game. So we look forward to you guys using that, with your discretion. You're making your own decision. It's not financial advice, but I guarantee it plays out well for the people who use it, and for the people who want to go swing heavyweight. Go swing heavyweight at 64,000. Go do it. And wait for that 6834. What about a $300 more on 64,000? 64,863 is $800 more. So go in and buy Bitcoin at 64,000. Wait for that extra $800, and then you book that trade. How about that? We would rather, I'm just going to say that not with jest, because some people want to throw so hard at a market, they want to go buy it at 64,000. Then they want to sell it. Then they don't want to sell it, right? They're going to hold on to it, et cetera. Like we called the top of the market. I was teaching people during that. Literally, this is the top of the market. I haven't met other people around me at all. No one. I have not met anyone. And I talk about crypto with everybody. Everybody owns Bitcoin. Everybody I meet has an interest in, financial interest in crypto. I haven't met anybody that is called the top of Bitcoin. No one. Zero. Right? I'm the only person that I know, literally. And I think, I've got, members of VIP I was teaching and instructing during that time, discussing with them and giving them charts that this was the top of Bitcoin. So it's not like it's just, well, I kind of said this. No, literally I delivered charts to them. It was the top of Bitcoin. Okay? So that's just the bottom line. That's the truth. When people can't handle that and they want to go find another opinion to go waste their money, I tell you, they don't belong here. They just don't. They don't belong with my group. They don't belong with my team, with our VIP. They don't belong with us at all, period. So they can hit the road. I'll just tell you. And the fact that I haven't met anybody else who called the top of Bitcoin, it's just, that's okay. That's okay, but that's not the first time that something like that's happened with me. 2008, I called the market, 72 hours before it dropped, and eventually it capitulated 10 years of earnings, okay? So, yeah, within 48 to 72 hours beforehand, maybe been about 4 days, I've said, and I've looked back at the dates, between 3 and 4 days, I'm going to say accurately. In terms of when the deal was done, when the paper signed, this and that, it was a 4-day time period. And, yeah, I called that, I'm going to tell you, literally, I called that the ink was dry on the paper in 2008. It dropped 10 years of earnings for people. I went to a heavy cash position, a 7-figure heavy cash position, just days before that. So in terms of this, I have enough respect for myself to try and be good in the market in which I'm even around. Okay, and in 2008, it's like if I'm around that market, I want to be good at it. So it's very important to me that we express these principles of kind of rational thought, of proper capital allocation. In terms of people, I don't want anyone around me to have a bad year or a bad month or a bad, that's just not the dynamic that I want to create. I want people who are powerfully minded and, equipped with cash reserves. Right, that's it. If you're powerfully minded, if you're able to engage in the market and enjoy it, we appreciate that so much, Angel. If you are able to enjoy the market, I tell you this: you're able to enjoy it when you have cash reserves. That's just it. And so this double and triple down approach at lower levels of the Fibonacci's, you guys know we've been covering that for a long time, and I literally mean. Angel, you've heard me talk about this a lot. Literally mean at the top level, at the 23.6. I'm telling you, if someone has, $5,000 at this level, well, I bet you they've got maybe, I'm going to say anywhere between. It could be up to 50 at this level. Believe it or not. And if they got 50 at this level, believe it or not, they may have 250 grand at this level. Now it may just be, maybe they have 100 at this level, and then maybe they have 300 at this level. Right? Then at the next one, maybe they say, okay, great, I have 900 at this level. And here, actually, I'm going to throw in here I've got 2,100, right? Or maybe I have 3,000, whatever it is, but it operates in multiples. The guys with $1 million accounts, I'll tell you, they trade sometimes like people who have $10,000 and $15,000 accounts. I've seen this. You guys see this. The guys with $1 million accounts, some days will I just feel like trading maybe 15,000 on this. Yeah. You're like, whoa, he's got all this money. He just kind of feels like, maybe on this, just $25,000, $30,000, just a little bit, right? Whereas the guy with $20,000 is trading 15 or 18 or 19 of it, right? He's almost fully exposed in the market in a position up here to where if it capitulates, and he can talk about all the fancy ways to get out of it. He can talk about a stop loss at 5% here, another one at 5% here, another one at 5%. You see what I'm saying? Another one at 5% here, and then it's 20,000. You know, the guy with only 20 has already taken a notch of 5%, 5%, 5%, 5%, 5%, and whoops. Right? So he can whittle away his 20 grand instead of approaching things. And the problem is it requires a little bit of patience. Crypto recruits people almost. And it's because there are great gains. Like, it's not that you can't make 300% or 200% or 500% or 1,000%. It's not that you can't make 10,000%. Period. That happened in on a new startup on Gate. In you guys, the links in the deal, but that happened in 24 hours, 10,000%, right? 10,000%. That's $100 into $10,000. Yes, that can happen in crypto. Absolutely. We have a distinguished group of members who will take care of those opportunities and advantage of those opportunities in the right way. And it won't, it'll be done without taking all of. I don't care how excited we get. Let's get more excited about that, right? But I don't care. What I care about is that this heavy amount of cash, right? The heavy amount of cash, that's represented in this figure here, has a whole nother level of cash down below these levels, right? A completely different level of big cash down below these levels, right? Big time reserve cash. So when I talk about taking care of things like appropriately in terms of like handling maybe even startups or this and that, and that's exciting. But you realize you don't have to put in. I mean, you can put in. What if someone put in like 10 grand into a startup? Well, that'll work, right? I mean, if $100 becomes, 10,000, it adds up extraordinarily quickly, right? I mean, you got $1,000, it turns into $100,000. So yeah, 10,000 would turn into $1 million. That's fine. That's good. But in terms of the nature of it, it's not the guy with 20,000 taking the whole enchilada, or even the guy that's got 500,000 or 100,000. And say, well, I'm going to divvy this up in 5 different startups, or I'm going to put this all into into Bitcoin right now. No, that star is there. That gets tucked right back down there. Okay, and the same thing with startups, same thing with anything. Although it's extremely lucrative, like the $1 billion is not right around the corner. It's just not right around the corner. Okay, you gotta like marathon it up and train on into it for like a pro. So you guys know that. I just the people that I know who are worth $1 billion, it wasn't right around the corner for them. If you guys know of anyone that it was, it's probably I don't know. But the ones I've known and the ones I worked with, it wasn't right around the corner, right? It was and it's interesting. It looks like we're trying to go into contact just to update here at the 38. Let me zoom in here at the 38. Yeah, close, guys, close. I'm looking forward to this hit because it's on the line, and I've been waiting for the line to get there. It's hit it prior heretofore, and so I'm looking forward to seeing what this will do. You'll see that top line that's expressed down is ugly. That is how ugly it's been around that price action. The lines just act like a magnet recently. It's just like, it's literally just, it's just cleaved to the line there, so to this trend line. So this is an important point in terms of the operation of the price, what's happening right now. It's a good time to talk about capital allocation. People in this zone here are saying, well, why don't we just, I'm gonna line this like that. There we go. I'm gonna put all my money right on the line. There we go. I'm gonna put all my capital reserves and everything else right on the line. Well, that's what we're kind of talking about right now. The guys who do well are measured. If they don't know how to operate the market or their position in the market, they're not going to be fully exposed here. If they don't know whether or not, and this is the nuance here, guys, whether or not in a horribly formed, I'm going to tell you, in a horribly formed, look at this departure here, okay, that doesn't conform with technical analysis at all, okay, and a horribly, horribly formed, guys. I'm going to say this falling wedge, whether or not the possibility exists that it could pour down 2 or 3 levels on a Fibonacci, okay? If they don't know that as a matter of fact, and they're still just saying, well, I'm going to take all my reserve capital and I'm just going to put all that stuff on the line. No, guys, no. That's if they don't know the technicals that well. It's just, if they do, great. If they're convinced of it, I just no. It's not the deal. The guys doing well understand, and the guys with money and a lot without money, I'm going to say, are capable of entering into a long-term kind of relationship with the market. And that entails not being overexposed, never being overexposed at anyone in any one position, at any one price. Never. Well, there's more money to be made. Great, that's good. Well, watch it make the money it's going to make, right? If you're in a real unique scenario, maybe you're in a once-of-a-lifetime situation in the market. I mean, the weekly RSI is like 15. Yeah, let's say the weekly RSI on Bitcoin is 15. All right, if the weekly RSI gets down to 15 on Bitcoin, I'll go and I will high five with somebody if they say they're going all in. Literally, if the weekly RSI is at like 15. I'll agree. I'll say that'll work. Roll everything. Sell the house, sell the cars, sell everything you can, put it all into Bitcoin if the weekly RSI got down to 15. Otherwise, it would take something that extreme to get into it to where I would say, just leverage house and home and everything else. And it's not fun to me, guys. That's I guess one of the bigger issues is that it becomes unfun. When I see people stress out that bad, it's like, that's it kind of defeats the purpose of life, doesn't it? Like we're supposed to have a good time, right? I mean, at some level, we're supposed to have a good time. We're supposed to enjoy what we do, right? It's not like conquer the planet and we have to make money. I don't know. I just had to bring that stuff up because some people in the market are, I don't know. We just like to trade. We have a good time trading. I want you guys to have a good time trading. So just a little bit of words of wisdom from other people, and I haven't discussed it much with this group. I discussed it a lot with people that I've trained, and I've trained some people that we were discussing Bitcoin at the top, etc. Talking about how it was the top, and I mean discussing it at the top just so you guys know because we haven't discussed it. But I'm talking about not just okay, you kind of call it the top. No, I'm talking about this here, bam, literally me teaching this along the way. The next move's going to be bam. And I mean just like that. They literally have charts for me in this area, okay, in this area of me with the next line, literally like that, guys, literally like that. They literally have charts for me from that time period. So, it's just I like accuracy in the market. I like a rational approach. And but hold me to that on the weekly RSI. If it gets down on Bitcoin at the weekly gets down to 15, we will all we'll all high five each other as everybody else goes all in. We'll still be waiting for maybe I'd like it to get to 12. How about that? So as we look at this, and I'm just kind of having fun with the whole process, but we do have a good time in the back. I was really happy to see other people booking positive trades. This channel here has just been, I'm going to say, guys, it has departed to the downside, to the upside. I right now have this cross indicated prior resistance to support line that I would really like to see hold. If possible, I'd like to just kind of throw this away, in terms of just kind of lift this out or do something else. I don't mind doing that at all. It looks, difficult when it's drawn like that. That just is the primary trend here, and it would be important. Understand, it would be important if it wanted to go up above that line. You understand that? So to the extent that it can achieve something positively, that's important, right? If it can get up above and beyond that. So I do have that indicated there because it is important. It's a breakout. It's just a bit frustrated. So, that's just the way that it is right now. We want to stay on that side of it. It kind of frees us up potentially. I'd say also if we could maintain this previous resistance to support kind of, I'd say, cross-trend line, then we're looking at something that's going to be kind of more open and clear in terms of the upside. Now, it's going to be open and clear to the extent of what? Well, to the extent that we're still going to need to conquer this prior trend line, okay? This prior trend line needs to be conquered. So as we look at that, that's from the 64.86310 traveling down. You guys know, just beginning this kind of retracement that we're in. It's just that is what we have run into. And I can place that right back on the top. Let's make sure that those lines, yeah, they're just about perfect. Let's make sure they're just right on. There we go. So we can see that's going to be the area. That's why I have the green right here, because the green's going to engage when we bust through that for me right now. Okay, so that's the level at which I would feel that, and I know this for a fact. Technically speaking, in terms of technical analysis, that is going to be technically when money's going to engage. Okay. It's also going to engage on the Fibonacci's on the way down. Some people may be, I just want to bring this up, some people may be in an accumulation stage right now. In terms of that, what I'd like to discuss is, yes, the price action going through here would be a great technical indication that it would be time to increase your position. That's a standard of technical analysis without a doubt. As we would look at doubling and tripling down your exposure at these levels below, it's going to reduce your cost basis. You guys understand that your cost basis is your cost per coin, your cost per Bitcoin. So as we look at that, the whole goal is to reduce the cost per Bitcoin, guys. That's the whole idea, is to get a lower price, so we increase the capital here at the lower levels. We do have, the expression of, if we were to look at, if we can back out of this as much as possible. Let me try and go to the 2 hour and see if we can fit a little bit more on the screen. That's nice. The lines adjust a bit. That's okay. But as we look at the 2 hour, for instance, this wedge formation that's perfectly formed, I'd say by the expression of the 64.86310 down to the about at the 59, just under 60. This trend line is perfectly captured within this hit recently by this nice move. So this is completing this falling wedge. Okay, that's completing this falling wedge with this move to the upside in terms of the kind of the designated formation, necessary formation. We have 1, 2, 3 hits along the top. We have about 3 hits, depending upon which time frame you're on, along the bottom. Now, it has ridden this bottom line support for a while. That kind of changes the characteristic of it a bit, but it's still clearly indicated. You guys know that. So in terms of the breakout, you guys know that's a time to go heavy. A lot of you are already heavy in the market. I appreciate that very much, guys. I don't mean to sound like I want people to pull back at all from their investing. To the contrary, guys. To the contrary. I think it's a great idea for people to go make more money in life and go invest more in crypto. I think that's the best idea on the planet, right? If people want to invest, more, heck, crypto can take it, right? It's, I think potentially headed, I think it's at 1.5 trillion right now. The aggregate market cap of crypto is about 1.5 trillion. I'd like to see it at 3. That would be nice to kind of double where we're at right now. And I could just definitely see that being good for everybody's holdings. And in the meantime, if it can go to 3, if people can increase or double their own involvement in the market, I think that would be great. Some people may choose to do that through trading, right? It's interesting that people want to make a great investment decision, et cetera. They're getting into a market, and I guess some people want to hold, but other people want to increase their holdings through trading. And that's why we focus on the fundamentals of technical analysis, is because it may be easier for people who have a position in crypto to try and multiply their money in crypto than it would be, say, if someone's making $100,000 or $200,000 or $500,000 a year or $30,000 to go out and say, well, I'm making $500,000 a year. Well, next year I'll just make $1 million, or I'm making $30,000 a year. Next year I'll just make 30, or next year I'll just make 60 or whatever it may be. So it'll be easier to multiply your holdings, to multiply your position in crypto than likely it would be, I'd say, if you manage it correctly. But that may be a big statement as well. You would think that because there's such a multiplicity of returns, okay, overall, as you look at the opportunities. But so few people know how to operate rationally in the market. Unfortunately, there's a lot of people, like 95% of the people in the market lose. They just do. They don't do well. So that dynamic is one that we try and reinforce all the time. this cross trend line here is important. We're gonna watch that play into this. Let's see, this 38.2, which is right at the 37,576 thereabouts on the Binance. Now, your exchange is going to have a different price. You guys always are drawing your own Fibonacci's, which is nice. We also share some charts in the back, which is important. And what a slow moving, I'll say this, guys, what a slow moving kind of beast right now. One thing this is showing you guys is you look at the price action all the time, you can't quite figure out sometimes, I bet, when you see some price action, you're like, I just don't understand why this is kind of curling around here and it's kind of curling around here. It just kind of seems to have this, this curl in here and the curl. I don't quite understand that, right? You guys see that a lot. You see some different formations you don't quite understand. Well, now you see this, and now you can understand that a little bit more, right? Let's look at, let's see, there we go. Let's look at that cross trend line right there, and that'll explain some of the pricing action to where that won't look foreign to you anymore, okay? This cross trend line from here is going to provide an angular kind of entry for this, and that'll just show you how many times these lines that you're not used to seeing, right, like a cross resistance to support trend line, right, cross indicated trend line, it just will show you, as you look at the price action, how frequently those are used. Do you see that nice little, the nice kind of, rounding here that's going on, right? That's when you see that in the price action in previous intervals, something like that is going on. Okay, so it's important for us to be able to recognize that because that happens a lot in Bitcoin. Okay, it just happens a lot in Bitcoin right there. It's like, well, yeah, okay. If you start to look at the intervals, even here, as you start to look at these intervals, you'll start to see why they're like that if you start to draw your cross, I'd say your cross trend lines, guys, in terms of your resistance to support or your support to resistance. Anything that's angulated like that is going to have a tendency to create something like that. So there's typically a line it's moving along. Those lines are places to book trades. All right, those are places that you can cut your teeth on booking trades. This line here is a nice place to book a trade, guys, and along this line. It doesn't have to be a huge trade. As you look into margin, as you look into some different options, things like that, you can get into those if you want to. I just don't want to lose any friends, okay? And I've lost some friends, not through anything I said, but just they've chosen to do some things with options, and they're just not they're not around anymore. And they're still around, definitely, but they're not. They're still friends for all forever. But they have a different feeling of the market. It's like it's bitten them, and it's like it's almost like the enemy now. And I don't like people to feel shamed like that in the market. It's not the market can teach you some nasty lessons, particularly in options. So you guys be careful if you're involved in that. That's just my word of wisdom. Definitely bullish on Bitcoin. Definitely liking the entirety of the crypto space. Definitely believing I would love better prices. Okay, if someone were to tell me, you know what, go ahead and we're gonna gauge your returns from right now to the end of the year. Go for it. All right, great. Well, I'm gonna say, well, can I include this right here? Can I include this $30,000 pickup? Well, I don't know. All right. So as we look at this, if someone were going to gauge your returns from this point forward this year, would you rather? I'm just curious. Would you rather have a pullback to the base of this trend line at 24? Would you rather have a pullback at 24, or would you rather base the rest of your year? And there would be a time consideration there. I'll agree with that. There would be there would be an opportunity cost because you will have given up the time it would take to get down there. I'll agree with that. Okay, so that's probably the most important variable is time. Okay, so and especially with Bitcoin, I'll give you that without a doubt. I think that's an important aspect. As I even would want a lower price. It's just the multiples from a lower price are so much more feasible. The compounded multiple returns, the 2x, 5x, 10x, are so much more feasible from a lower price. Even from a lower price, if you were to say 37,000, if you got in under 30. The degree of multiplicity is such, it's a big deal, guys. As you start looking at your returns, you guys know that, but it just becomes a really big deal. So I wanted to show you guys something, and I think it's kind of interesting. If we were to, for instance, and let's go ahead and look at this. I wanted to draw this. I did this exercise earlier. I wanted to just show you. If we repeat this pattern, okay, I just want to say, if we by chance were to repeat, okay, and I'm drawing along a previous retracement right now, I want to give you an idea of what the market could hold. Okay, just what it could, because a lot of times we are focused on the positives. Now we just hit, remember guys, we hit that 23.6 extension. You guys remember that? The extension on the upside? Right, okay, we hit that as resistance. You guys remember that? Yeah, you remember that. So I wanted to bring that up in the context of what I'm doing right now. I wanted to bring that up. So if we just repeated the pricing, because we're at that 23, we haven't been able to break through it. Now, we may be able to. Okay, we may definitely be able to break through that. Let's see. We've got this in the way first. I'm going to say we've got this in the way first. Now, I want to bring this over as an exercise. Okay, now what this is the immediately preceding price action almost perfectly. Okay, I want to give us an idea if history repeated. I just want us to wrap our mind around this, just to think about it. If 47 days wanted to take its time and look like this, I just want you to be prepared for the possibility that something like that could occur. Just that something like that could occur, okay? Just to prepare yourself mentally for the fact, and it may be higher, it may be lower, etc. But what if the next 47 days look like that? Now, we came off of a period of time. It's interesting to me, because we've been in a sideways pattern for 60 days. If the next 47 days looked like that, what strategy would you employ right now? If you had 47 days that were going to look like this, which is just a literal copycat, guys, a literal repeat. It's just for an example. But if that were to repeat over the next 47 days, what would be the absolute ultimate way to maximize your profits? If you knew, literally, that the price action was going to be in this zone and operate like this, what would you do to maximize your profits? I would say you would dig into your Fibonacci levels. I would say you would dig into your pricing targets. Of course, you'd probably have some exposure to some altcoins, maybe trading Ethereum, maybe doing some other things as well. And just understanding that the big point here is, which moves are you going to want to get? Which moves are you going to want to put in your pocket? This move, right? That spike right there, right? Yeah. This move, right? Yeah, that right there. You want to erase all the negative, first of all. You want to have pricing targets on the downside, and guys, you want to have take targets on the upside, right? Now, if we establish a very strong trend, this is the one difference. Those 47 days don't need to necessarily look like that. If we establish a trend, okay, and we can move to the upside, that would be ideal. I'm not saying we're going to push into another 47 days. That's just the periodic measurement between these two peaks, essentially. Okay, so I'm just saying it from a replicated standpoint in terms of expectations, but I do want you guys to think about that in terms of what strategy would you deploy on that. It will speak volumes. I just want you to be prepared for every scenario. It busts out, we go bull, right? We're in a bull run, and life's good. I'll tell you again, this degree of a move is rarely just wasted. I'm going to say that one more time before anyone starts to think that I'm any type of bear whatsoever. This degree of a move to the upside is rarely just wasted. It's just not. It would be abnormal. I'm going to say something would be abnormal in the market if it were just wasted. Okay, so that's really the truth. That's what I really truly feel. So I think there's I don't want to say a probability, but I think we can almost say a probability because based upon the data that we have, because the previous moves, strong moves to the upside period for Bitcoin have been. And I guess it looks a little bit more jagged. We can compromise that statement a bit by the fact on the hourly it looks a little bit less composed. Let's go ahead and say that. It looks less composed on the hourly. Okay, it looks stronger than the preceding intervals. Definitely, it's more compact. Um, what would we say? Hey there, Marcus in the house. You up trading, brother? Huh? That's nice. So this looks a little bit more diffuse, I'd say, here in the in the hourly than it does on the daily. But as you see the daily, it's just a beautiful, beautiful move, right? I mean, it's look at the preceding price action this year at the beginning of the year. This is unprecedented. It's just all of this was jagged, working its way up, really unpredictable. This was just nice, right? I mean, this was a really, really nice move. So when I say, that this would be replicated, I'm just saying it's such a nice move to the upside. Like, we have such a beautiful move to replicate in terms of a formation that can give us a nice pricing target on the upside. And I drew the other, so I might as well draw this. If we were to replicate what just occurred here, why don't we do, how would something like this look, right? That would be a nice move if we were to power out and continue a move to the upside like that, right? That would be really nice. If we were to get in the January, let's say the January, February, March kind of mode, and if all of a sudden we found ourselves back at kind of that level, right? That would be really nice. And then if we were to, kind of even push, and continue to push, now that's starting to look like a chart everybody get excited about, right? So we've made that degree of a move. As you look at the left-hand side now, the January and February, it kind of looks like that, doesn't it? Yeah, it's that strong bullish move up. It would be, kind of a series, I'd say, of bull flags or formations that could get us up and above this former high of 64.86310. When I look at that, it's is that feasible? Absolutely. It's going to require some buying pressure. The traders alone probably can't do it. The individuals with accounts of, I'd say, $500,000 and less probably can't do it. Okay, it's going to be the institutional framework. Collectively, they can if they're attached with an institutional desk, etc. But it's not going to be, even the big guys in the market probably aren't going to do it. The sentiment of the sentiment. It looks like we're just almost on that. I like to see that. We are almost on there on the line chart. I like to see that. Now we've already hit it. We've already hit the 23.6. I'm sorry. Let's see. Hold on. Yeah, 39,510, 23.6 was hit. The move in terms of the overall Fibonacci, like, it's not like we haven't played any Fibonacci. It's not the first Fibonacci we've played. This 39,600 was played. It was a move up to about 40,320. It was a little bit more aggressive on the candlesticks. If you look at the candlesticks, a little bit more price action, not a lot. It's been really frustrated, really consolidated here. We have been trading the heck out of this, not on the hourly. You guys know when you trade, you're down on the 10 second a lot of times, or a minute. So this push here has been interesting. It's just been slow price action. It has shown us, the nature of the design of Bitcoin, because that cross trend line there from the resistance again to this support, okay? Those trade, all right? People use those in terms of entries and exits. People are trading Bitcoin all the time. You guys know that. We love trading it. It has great price action. That's what our group does. They also trade Doge. They trade all types of stuff. Trading ETH, trading Rune. Shout out to people trading Rune. What's up? Yeah, that was beautiful. 6 days, like 100+%, 150%. Very, very nice. Very nice returns. Very excited about that. Came from a very good friend / source in terms of bird flew by and told me that Rune was going to be great. In 6 days, it was up, I don't know, I think 89%. Now it's up at like 150%. So that's impressive. I'm impressed with my friend, to tell you the truth. He's very much a professional. Very interesting industry he's in. A lot of capital exposure. So I was interested to hear Rune from him. I was like, wow. It was one of those deals. People know about Ethereum, definitely Bitcoin, but they know about Ethereum. And then he mentions Rune. I'm like, Rune? I was like, wow, okay, very interesting. I'm talking about, like, some individuals are getting some exposure to crypto right now that would really surprise you guys. If you maybe it wouldn't surprise you. I mean, they're talking about it, and we got the FinTech Task Force in D.C. We've got, we literally have, senators coming out saying they hold Bitcoin, et cetera. So people of that caliber are getting in touch with. They're getting in touch with altcoins. I mean, that's they're getting excited about the technologies behind the altcoins. Like, that's the direction that things need to go. And I would imagine more of that will develop as, like, J.P. Morgan decides to get in with their wealth management division. They're going to start doing reports. The more familiar they become with the industry, with not only Bitcoin, but with altcoins. Can you imagine J.P. Morgan starting to say, yes, well, we have a great coin Rune or a great coin Luna or XRP. We really believe this one would fit your portfolio well, sir. Guys, that's when the institutional framework and the wealth management divisions of the world start pouring in money into crypto like that, not just Bitcoin, but like altcoins. Guys, that's an exciting prospect there. That's something I'm definitely looking forward to you guys having a first mover advantage if and when that does occur. And, to the extent that this represents a bottom in the market, definitely you guys have backup reserve capital in the instance that it is not, and you probably negotiated your position since this high. You guys are good traders. I know that. But in terms of the first mover advantage it would present to you, just understand there's a big, huge swath of people out there that are well-to-do, that have wealth managers, etc., and they cannot get altcoins right now. So every altcoin that you have is one that they're not even capable of buying yet. So everyone wants to get in pre-market. I know, we're at 1.5 trillion right now in terms of the overall combined market. Right. Okay. So the fact, though, that institutional investors can't offer altcoins, can't offer really Bitcoin, things of this nature, they're just starting to get into that field. Guys, you have a first mover advantage. That's why I'm going to go ahead and repeat. It's so critical in terms of the proper allocation of your capital right now and you getting the right price, deploying your cash at the right prices, guys, so that you can lower your cost basis. Let all the other guys buy on top of you. Let all the other guys, let the Schwabs and from the wherever guys, J.P. Morgan and Morgan Stanley, let all of those guys in the wealth management division buy over you. Let that happen. Focus on your pricing targets now. Focus on properly deploying your capital. Okay, it looks like we're into a retracement. And in the meantime, we're in. I'd say we're still on the trend line, guys. And I didn't want to call the retracement yesterday for reasons exactly like this. Right, for this exact same reason. It's like we've been playing patterns the entire time. We've literally been trading patterns the entire time. So we got back up into a pattern, and I woke up, in the morning. It was just barely out of that pattern. The slow movement at times of Bitcoin is nice. It can allow you to have a little bit of a lifestyle. A lot of you trade very very heavily. And that's that's to be understood. But you also need in there a little bit of personal life, right? You need a little bit of that essence of family or essence of friends, and we definitely have that camaraderie in the group. We have a great team, and it's nice to know that, guys. It's just, isn't that nice? It's really cool. So as we look at like how to beat the market, proper guys, capital allocation, you guys know what's at the bottom, heavy resource cash, right? Heavy resource cash, like multiples. If you were to look at all your resource cash, it completely dwarfs what you got in the market, right? That keeps things fun. It keeps things entertaining. It keeps things to where you can enjoy yourselves. And guys, the right investment. People always wonder, like, you have to put in all the money, right? No, the right investment will produce. If you put 10,000, let's say 10%, 10% in the right investment will produce the other 90% you wanted to invest. All right. So in terms of how hard you want to throw at the market, make sure you have that other 90%, because if the 10% falls, from $100 to $1, you want to make sure you can guys, that happens. But in crypto, I wouldn't say a 99% retracement at all. But the guys who have the backup resource capital and multiples of their current exposure are the guys that are doing really well. So we appreciate that very much. This falling wedge right now, we're looking for some action at the instead of the falling wedge. I'm going to say because it's very poorly expressed right now. It's not bad. You see it picking up right now on the trend line. That's nice. The 38.2 guys at 37,617 is indicated now. That's for the entirety of this for the fibs drawn on the entirety of this recent spike. So as we look at that, it's a big moment. It's about to hit that. We, this top level, maybe people peppered in. We would hope that this would react once it hits this line. We would hope there would be a bigger move than what we saw at the top level fib. We would hope that. Does that always happen? No, but I'd say the majority of the times, the 23.6 is going to play heavier. Okay, I'm sorry. The 38.2. It's gonna play heavier. I'm sorry, where I was going. I'm thinking ahead of myself. The 23.6 is going to play heavier if you're trying to formulate some sort of a bullish pattern, right? And I'd say like a really bullish pattern, particularly if you're moving up and you start to swing up and you're formulating a pennant. You guys know if you're formulating a bull pennant, again, a pennant is going to have a strong move to the upside. It's going to retrace, okay, probably not down past that 23.6, okay? So you'll play heavier on the 23.6, a top level, okay, if you're formulating some sort of a pennant, okay? Right. So that would be indicated that you would play heavier, towards the top if you're formulating, I'd say either a bull pennant, and a pennant's going to look like, guys, it's literally going to look like a baseball pennant, right? It's real easy. It's like a golf flag. So it's just really easy. It's a symmetrical triangle. You guys know that? A pennant's going to be a symmetrical triangle, but typically it's going to pick up at that top level, heavier at the top level. This could still formulate a flag. I want to let you guys know that in terms of a bull flag, that it still can be, it's still potentially, in the works here. And I bring that up because you say, well, I don't know about that. Well, in January and February, the flags that were built were really kind of just, take a look at this, guys. And these played, just as we look at the daily on this, these just played. And I think we should, talk about that. We can take that away. Let's just look at that on the daily. Look at how volatile, how aggressive this was in terms of pricing. Still formulated a bull flag, guys. That bull flag played out. It ran to the upside in terms of its pricing target perfectly. So just recognize that this level of volatility here, it can certainly still produce a bullish formation. We would love to see a really strong hit off of this move, and let's go ahead and take these stars off just so we understand. You guys, we've been through the capital allocation strategy. That is important. I want to make sure people focus on that, and not to be too shy. Anything else? If you got the backup cash, then let it roll. If you got the backup, if you have the backup and you're not worried about it, there's no reason not to just heavyweight slam into it. Just enjoy yourself and just trade the heck out of crypto. There's nothing wrong with that, or just buy the heck out of it. Just have fun with it, especially if you have that backup capital. So as we would look at, let's see, this move here, this previous move, we could measure the entirety of this. Looks like the 23.6, yeah, depending upon where we really decided to put this, I guess, it would take it all the way down, probably close to ground zero if we wanted to keep that above the 38.2. I'm not sure the move is as comparative, to tell you the truth. That was a heavy move to the downside. That was some real aggressive price action. Not comfortable to be involved in that. The beginning of the year, I kind of taught everybody. It's like, well, yeah, if you're in the right part of the run of the money, of the bull run, then it's okay. You can deal with it, but otherwise it can get kind of difficult. So for people, it's just it stresses or it stretches your ability to kind of compute and comport with kind of rational behavior. Right? It's going to push you to the max. That's what the market's good. It's the same notion that everyone has a 20-minute time. What is it? Essentially a 20-minute. Excuse me. I think it is 20. Attention span. Right? The same kind of ideal works with the market. There's kind of a gauged level of behavior that people are willing to, kind of a threshold that they are capable of handling. So We appreciate Angel shouting out today. He's done, I think, 3 super chats. He's $11,500 level of supporter. I'm excited about that. And Angel, I think you had a bang up day on Luna. I think that really went well for you, and I was glad that I was a part of that in terms of the accumulation schedule, all that stuff that we did on that. I know that you got in, and that went well for you. I'm glad about that, and glad about Rune as well. And thanks for sharing your success, letting us know that you're doing well with your super chats and everything else like that. Just kind of spreading the it means a lot, spreading the energy to the group, because I know it's late for everybody, and it's nice that this is kind of the time sometimes we do crypto, and it's nice that you are. And I guess he did do well, huh? He's shouting out. He's like, yeah, he did well. I don't know how well he did in terms of Luna, just so we know for the record. And I want to preserve it for posterity's sake, for us, Angel. Because we rocked that out, didn't we? We between the charts and this and that, and you asked me if you sell. Oh my gosh, do you remember that? Just as a friend, huh? On Luna, you're like, should I sell? Like, and you're like, wasn't that funny? We were talking about this and that, and so. Cranking out another super chat. We really appreciate that. As I look back at some of the text that we had, it's just, it was kind of like Rune, right? And last night I was like, Rune, and you're kind of like, well, should I go ahead and sell? I'm like, why don't we just wait until the morning? Why don't we talk about it in the morning, et cetera? And we just, it's not, look at him, no way, no way. That's funny, huh? So as we look at that, it's just nice to see you doing well, and I'm glad that we both played a part in that. Because, sometimes, if something go against us or it's not behaving right in terms of pricing, we don't want to book a bad trade, right? So we understand that dynamic. It's just some of these have been like, we went through that aggressive schedule on Luna, right? I don't pull that out for everything, right? In terms of the heavyweight kind of approach. Like typically, this will be the schedule that we'll do for I'll do for just anything we look at. And I really appreciate you letting us know you just slammed it out of the park. The community really appreciates that. I know you know that, but you're killing it like nobody else's business, and we really appreciate you letting everybody know that with super chats and everything else. But as we pulled up the heavyweight, like on the 10%, I'll redo just so you guys know. Like if I'm interested in accumulating really heavily in, let's say, even within a Fibonacci or within a Fibonacci zone, right? If I want to trade, like we could have traded the entirety of almost each and every one of these levels of all this volatility if we had stacked, and it's interesting I did bring this up to people, but if I had stacked in a different level of pricing targets that execute not at the standardized Fibonacci levels, right? Instead of that, let's say instead of the 23 or the 38 or the 50% retracement, I would set it up to where I had, increments of 10%, or let's say 0.1, 0.2, 0.3, 0.4, all the way down. It would give me at every 10% interval. It would just be a pricing tool that I've created that I would put in between the Fibonacci's that I would literally use to accumulate at heavier levels of cash the further it went down to cover my upside risk exposure. So I might put $100 in at the top. I might put $300 or $500, let's say $500 in there. I may put $2,000 in there. I may put $5,000. I may put 15 or 25. I may put 50. I may put 100. I may put, however that's going to work. It's going to be a heavyweight cycle of accumulation until it starts to hit in this level. And I'll cover my upside. It may be 100, guys, or just use the example of say $100, then it goes to, but when you get into a multiple of 10 at a compound rate, you start to see, well, you're playing light in the top. Yeah. But I can do that and then set my orders up in 5 minutes, guys. I can literally set up orders for 10 different levels within like 5 minutes. I can program my Fibonacci ahead of time within and particularly when you have pricing and cross trend lines here. All right, when you have cross trend lines in this area, and it's going to frustrate and do something interesting like what it did. But when you have this much price action within a zone, you can do, if you want to, you can trade the channel. That's easy. If you are not into channel trading or swing trading, you can devise a mechanism by which you can just essentially, guys, modify your standard Fibonacci tool. Just modify it. Make it steps 1 through 10. You can make it steps. You can put 20 steps in here. You can put as many as you want to. You just, wham, put as many as you want to. Make it every 10%. Make it every, if you want to, every, if I want 20, I'll do it every 5%, right? Then you can enter your orders in. Then you can literally compound your orders in terms of your cash position on the way down to make sure you start to catch some of these. And you can execute some trades. You get a feel, well, this is just not moving much. Well, you have a higher, overall threshold. That'll, I'll say, or an idea. You'll have a better idea. Let's say that a better idea of the price action. You'll start to book those trades, and you'll make money on the way down. Okay, you definitely would have made money here. Now, if it drops down real aggressively to the next level, that would be a circumstance where, this is indicated. I'll say this. This would be indicated particularly for individuals who don't want to trade a channel. Okay, people who don't want to trade a channel. Okay, that's kind of why I brought this technique up, because not everybody in the day trading group is looking at, swing trading and sitting there and saying, well, I'm going to watch this exactly when it gets here and hit the buy button. No, you don't have to do that. If you have any kind of a diagonal channel, you can enforce your pricing entry, and you can work on your exits with the trend line if you want to. But as you practice, maybe that's a good way to say you can practice that. Or like with Angel, with Luna, we use that strategy like deep below. It was, I think at the 78, it was really low. So we used the heavy accumulation schedule, and I just brought it up. This is where you start in and make sure it's each and every level down. That's where you start to accumulate that, and that's where you start to hit. And those are your pricing targets. Just get after it. So that's what we do at kind of a core value, what we say, kind of a deep value approach to accumulation. So I'm glad that we had the discussion, that everything went well. Angel, you're killing it on Luna. It's beautiful. So I'm glad that we did that. Everyone else who's traded Rune and done well, I'm excited. I brought that to you guys before it popped up on anybody's radar. Truth, right? It wasn't even out. In terms of, I'm going to say this, out of its channel or anything, it was a dead fish in the water. Nobody wanted to talk about it at all. We got on it first, right? That's pretty cool. Now it's up on the social radar. You guys know this. This is truth. Yeah, everybody, you know this. Angel shouting out, he's done well today on a lot. He did real well on Rune too. I brought it up in the back room before anybody. So bringing that information to you guys ahead of time is what VIP is all about. If you guys aren't members, hit the join button. We have a great group in the back, and it's just, we had 130 people join the first month. It's just people who like to trade and beat the market. We try and focus on, good coins in terms of, you're welcome. You're welcome, Angel. It's a pleasure. It's an absolute pleasure. Excuse me. What do we have? Night Shift Pep Talk. Loving it. London. What's up, Steve? Absolutely. Yeah, Rune was huge. And let's see what we got here. I want to make sure I've said hello to everybody. Yeah, absolutely. So we have that scheduled in that by the 10s, right? If we have the 10, 20, 30, 40, 50, 60, instead of the standardized Fibonacci's, you understand you can use your program, you can use your trading view, etc., or anything that incorporates trading view into incremental, I'd say into the incremental levels of accumulation. Right? You may be in a position, maybe you think Bitcoin's just going to rifle up and that's just it, and it's going to be out of the woods from here and that's it. If you believe that, maybe you want to get involved in some more aggressive targeting, right? And just make use of the technology that you have. There's no reason not to do that. If you're in a channel and you don't know exactly, well, I don't want to necessarily, go through and maybe you're just not into swing trading yet. As you guys develop your skills, it's not difficult in terms of that, but you do have to watch it, right? This would be a circumstance depending upon how you wanted to enter your trades. If it was really solidly within a channel, it might even give you a little bit more time. Say, well, I'm going to kind of double or triple down into this and, accumulate along the way to see if it might pick up even earlier and take off. That's also another way to kind of manage your position and gauge your strategy there. So, glad we did that on Luna. That was nice. That was good. I smoked a nice cigar on the occasion. I thought it was indicated. Had a little Cohiba Black today. It was a nice cigar. Those Cohiba Blacks are really nice smoke if you guys are into stogies at all. Very nice cigars. Have you guys had one of those? Really impressive. Wow, it was nice. So as we look at not as good as one of the Cubans, but that's okay. As we look at this, we're just slamming down into a Fibonacci level. We will see what the response is. We'll look for hopefully some volume to kind of creep in. Wouldn't that be nice? This is the most uneventful slam into. Look at this. It's literally just, do you think it's telling us where it's going? Just look at it. It's not unentertaining, I have to say. I mean, it's just suspended in straight air. It's telling us, like, does everyone know what's going on right now, huh? We are in the midst of picking up orders on Bitcoin, right? So people with orders there are probably already getting picked up. The ones that are a little bit aggressive, right, are getting picked up now. Now, within the channel, we have more room in the channel. We're still going to be fighting. What's going to be interesting, guys, we're still going to be fighting, okay, this line of resistance here. Now, it's just going to take a real, power through kind of moment. At some point, I would think, and we'll have to watch the RSI at some point, unless it's just beautifully balanced here on the hourly, I think the 4 daily is going to, I'm sorry, not the 4 daily, the 4 hourly is not a 4 daily, obviously. I'm sorry. As we look at the 4 hourly, guys, that 4 hourly RSI, I want to see that get down. If we can get the 4 hourly down again, it's just not that far away, down to 30, I will be happy. That is where we took off from. This launch here happened from right at about 30 on the 4-hour RSI. So that'd be nice. We're currently at about, let me give it to you, at about 33.5. Ooh, that's nice, huh? It's not bad, huh? That's not bad. Is that right? Right at 33. Gosh, guys, huh? That's nice. It's not bad, huh? Looking good. I'd rather see it a little bit lower. The daily's fine up. I'm fine with the daily. We just, we crested into below the 30 on that recently. So, yeah, I'd rather see it a little bit lower on the 4-hour, but it's still not a bad position to be in, right? It's just, it's nice. Now, the question here is going to be, are we going to, as we look at this, do we anticipate, and let's look at this. Do we really anticipate, you may have the question, let me see, on the 1 hourly, make sure I've got all this right. Do we anticipate, that's right, there we go. I knew that had moved. So there we go. On the, do we anticipate that the line will set at this point and move? You may want to know, like, how to enter into your trades. You may want to know, like, should I be aggressive or not? When you enter into the limit orders, it's, do you always need a threshold below in terms of a stop loss? You guys understand those details? I hope you do. A limit order, let's say a stop loss is just a trigger trade. It hits a certain, what we say, a certain trigger, a price that you'll predetermine. You will put that into your exchange, and you will go ahead and have that execute. If that price condition is met, you'll typically sell it a little bit lower. Make sure you sell it lower than the trigger price. Okay, that's saying, if it were to fall to whatever price you don't want. Let's say you're trading this level. If it falls to 37,000, right, from 37,727, if it falls from this price to 37,000, I want out, right? You may say something like that. Just make sure that if you're specifying 37,000, as you're specifying 37,000 as your trigger price, okay, make sure that when it triggers, you're selling for underneath that trigger price, so that your order will execute in the market once that condition is satisfied. You guys get that? It'll trigger, okay, the sell order will trigger when a condition is met. You want it to trigger if you're selling below the actual trigger price. That will ensure that your stop loss is effective. All right? So just remember that as you plan this up. A lot of you may know full and well you may know full and well what a stop loss is, but we can get into some simpler or more sophisticated discussions at any point in time. So that's it's good just to discuss those things. Now we are just to review, because not everyone some of the software is complicated if you're not into it, right? As we look at this, this is an interesting line to kind of just take note of. This cross trend resistance to support line is kind of a nice line. It just is. I would question the degree to which, and has it already hit? Yeah, it has. That's a nice touch right there. It's close. It's close on the candlesticks. And it's just, I really believe that these are the correct Fibonacci's because we have 1, 2, 3 hits right in line with these targets right now. So this is an active, real Fibonacci, kind of trade going on in line with it's interesting. It's wedged in with a line of resistance from the channel on the top, right in this area, and a line of support from this cross resistance to support trend line that we would love to see hold. If we can see this hold like just an anchor, if this can just hold, guys, we're going to be having some fun, right? That would be a beautiful expression. This would be a really interesting type of formation it might want to try and develop here, guys. It might be really interesting to see what Bitcoin wants to do. It didn't do much at the top level fib. Okay, when it fell out, most people knew at the trend breakout that was kind of maybe the time to relax for those who wanted to trade or something. Just maybe they pull back from the market. So we're looking at the trade level here. We just know the level it's indicated at. We can certainly do, if you guys want to do extensions, we can talk about extensions at any point in time. The issue is extensions become a little bit less relevant when you're kind of tied up or locked into a channel, right? I think you guys will agree. They're a little bit less relevant. Yes, we have a line of support. We also have a line of resistance, right? To the extent that this wants to act as a wedge formation, I would state, as a matter of fact, although this wedge continually, you guys know last night we were doing this, early yesterday morning, I guess, we were doing this. We were discussing the falling wedge, right? The fact is that it is bullish by design. Okay, this is a bullish pattern by design. So the fact we talk about, well, is it needless or is it productive for us to engage in extensions? We can definitely do that now if you would like to. I'm not inclined to do those through I don't know. I haven't done them very frequently or push them on like the breakouts of wedges. I just don't typically do that. You may want to say, well, how do you know? The market sentiment a lot of times is going to let you know whether or not you are in a wedge that can be defended. Okay, and in terms of being defended, I mean that it is still a move to the upside. It's a continuation pattern. Now, in terms of making this more aggressive, I would like to see this wedge formation, maybe be taken into consideration like this, right? Maybe this is even stretched out like this, right? Maybe that's the go-to. I'd say that is a potential cross-indicated line of strength that would just be a previous support to another potential level of support that's also cross-indicated with the former, and this becomes kind of nice, but with the former resistance to level of support. This line's not fully indicated, I'd say, yet. It's close, and I don't want that to be indicated and it be breached already. I don't necessarily want that. If that is the case, I think it will pop back up above that. Let's go ahead, and I don't want to cheat on the lines. I should probably make them a little bit thinner so that we can definitely, if you guys ever get a little too tight with your lines, just make them thinner, guys. Just lighten them on up so you can definitely get just get the perfect lines. They're going to pay dividends if you guys really, really, not just generalities, but the more you trade and the more you diagnose real specificities of the market, I think the better off you will be in terms of drawing your lines overall and understanding the need for specificity. It's just really, really, the more specific you can be, guys, the clearer your pattern's going to be, the clearer the implications are going to be. It's just going to be nice for you. So, yeah, that right there is expressed well. Let's see what we have. Here, I did go ahead and I pushed that, and I'm not sure that's it's just what I would kind of like to see, right? It was just kind of like, I lightened these up to see where we were at on this cross line of support here. We've broken through that. As you look at that, we've broken down through that. Let's look at the line of support, and I want to just make sure that we have or have not broken through this as we look at this cross trend line of support here. And if that is the case, are we just going to continue to barrel down through a channel line. If that's indicated and that's what's going to occur, that's fine. What do we have interrupting us in the meantime? We have the 38.6 Fibonacci. Let me go ahead and just tighten that up. Let me make sure that we're right on with our fibs. And yeah, that's going to be indicated. Okay, so this has what's happened. It seems like it's taking a long time. It's literally just been, and that's an interesting line for us to draw here. You guys will see this cross indicated, this line of support from the previous move. You'll see this hitch right here, right? You'll see that move right there. That is that line. That's exactly what that line is. You wonder why are we drawing all these lines? Because that trades. Someone literally gets in and trades that level. So that's these are standardized. All of these different movements here, they all have some origination, either through the previous move here or through I'd say an outside move from a different period. So it's interesting. Those are the trade dynamics as we look at them. There's a reason for every movement in here. Someone's buying, they're taking, they're selling, they're entering or exiting the market. That's what all these moves are. Believe it or not, they're all expressed. When you trade at lower levels, you start to understand that. That's why we spend a lot of time at those lower levels trading. We just enjoy it. It makes this look really easy once we spend a lot of time down there. So yeah, we're looking forward to that. I'm going to just give another shout out to Angel because Angel, I think we have some exciting things on the horizon. Absolutely, in terms of getting things together. And it sounds like we may be doing some fun, huh? It sounds like we may be having some fun. That's the only way we're going to do that. We talked about maybe some investment ideas or something else like that. And I think that sounds like a great idea for the record. I think it sounds like a great idea. I want to put a smile on your face. Maybe a hot dang, something like that. If you want to, we'll turn the music up and have fun. Maybe on the next live stream we do. But I do want to let you know that sounds like a good idea, what you proposed earlier today. And I'll clear that up tomorrow in terms of how great of an idea it is when I talk to you. How about that? In the meantime, you guys have, what is this? You guys have this wonderful level here, this 38.2. Go and get it along with you guys saw the beginning of the stream, all of the backup resource cash. Don't ever be overexposed at any higher price. Also, don't miss the launch when you hit a Bitcoin spike. Don't miss it, guys. We try and never miss one of them. That's why we are Crypto Kingdom. And also Bitcoin spike. Make sure you guys go ahead and subscribe. Also, you guys, the $5,500 in USDT, that link is in the chat right now. So go ahead and get that, and it'll be fun. And also on Bitcoin Spike, make sure you follow us. It's just Bitcoin Spike. It's real easy. We just changed we're changing some stuff around, so should be fun. Also join up with VIP. That is the top level of membership. And guys, that's all the exclusive perks, the coins, the this, the that, everything else. It's like if you want a 2X, like you may have to wait a day, right? I don't know. It's almost like that sometimes, but some days, some weeks we have multiple ones. Well, this is a 3X, that was a 5X, it was a 2X. It's just, it's kind of, it is what it is. But no promise or guarantees. You guys do your own homework, but we have a lot of guaranteed fun, I'll tell you that, and especially when people are getting good returns. So let's see what this can do. Let's see what this bad boy can do. If you guys are stacked with orders right now and you have plenty of resource cash, etc., you're enjoying this price action. There's no stress. You're probably taking some great profits, right? You've broken the trend line. You're kind of recapitalizing. And again, let's just review. This is where this point here, this break of this trend line, as we look at this, that's really where we want to see that the break of that trend line there. That's really where the fireworks start to go off in terms of the increase in position. It can happen here. It can happen anywhere along there. The further down that it happens, the more unintriguing it becomes. I'm going to tell you guys that. So I think you know that. We don't want to push this pattern too awful far, right? Let's take care of this early if we can. I have a threshold marker. Probably move that threshold marker like right up in here. I'd really like to see it up in here. I want to see this respected by everyone and for them to get aggressive. This would be really nice, huh? Wouldn't that just be nice to go ahead and move this up here? It is indicated, guys. We have not wanted to capitulate this level. 1, 2, 3, 4, 5, 6 times. 6 times we've defended 30,000 like there's a program automated key that's cranking cash into the market that will not surrender 30,000. So I don't know. I'd love to leave this right here and have this just go ahead and it not break 30,000 and just stay there. I'm going to leave it right here for right now, just within the scope and purview of this formation. Okay, I'm going to always stick with the technicals in terms of the pattern formation. And yeah, this would be nice to see it defend. I'm ready for it to defend it or for it to break out. And yeah, we get $100,000 Bitcoin. Just let everybody stand in line, right? Because they're all going to want to buy it. That's the truth, right? We're going to be prepared for the upside and the downside. And if we can get past this resistance line, guys, it's going to be a nice ride. At that point, guys, this kind of a wedge formation here, I'd say we'd be looking at some nice profits and some nice entries, some big cash on the books, guys. It'll be fun. So take care of yourselves. I hope you guys will be able to get some rest. I appreciate you sticking around for a while. Make sure you're plugged into the back rooms. I know you guys are, but the back rooms in terms of the guys, there's just some important crucial lessons coming on here. This breakout, talking about the time to enter, need for volume was right before that. Just some really nice stuff in the back rooms. You guys see this, this prior trade here on Bitcoin, inverse head and shoulders, the importance of volume, different things going on. So I also cut you guys a special video earlier today. I hope you guys saw that. VIPs, I hope you guys saw that. And I'll try and do a few more of those as we kind of look at some maybe increased efficiency in terms of resource allocation. We'll try and make your experience a better one. That's my goal, guys. You know that. And I want you guys to be happy and healthy and just doing really well. Happy, healthy, and wealthy. That sounds cool. So have a great night. This is London. Angel, we appreciate you, and I appreciate all you guys. And we just appreciate you as a community leader. And yeah, let's see if Bitcoin can do what we know it's going to do. It's going to behave somehow, and we're going to be ready for whichever. If it goes up, we're going to be ready for it. I have my alerts set, guys. You guys know that. And orders programmed. Here are the program levels, okay, and the strategy we covered tonight. So you guys